Whether you're a crypto enthusiast or just getting started, understanding the factors that influence Bitcoin's price is key to making informed investment decisions. In this video, we'll be exploring the various factors that impact the value of Bitcoin, from the fundamentals of supply and demand to the impact of global events and news cycles. We'll take a deep dive into the forces that shape the crypto market. Welcome to Knowledge Pilot. Bitcoin is a digital currency that was created in 2009 by Satoshi Nakamoto. Transactions of Bitcoin are recorded in a blockchain, which is essentially a decentralized ledger that contains the history of every transaction and who owns each unit of Bitcoin. In contrast to regular money, Bitcoin is not controlled by any government or bank. As a result, buying Bitcoin is different from buying stocks or bonds. Because there are no financial statements or company performance publications to analyze, for investors in Bitcoin, it is important to understand the factors that affect Bitcoin's price to gain a better understanding of this unique investment. When you buy stocks, you become a shareholder in a company, but buying Bitcoin gives you ownership of a certain amount of cryptocurrency, just like any other currency. But unlike regular currency, Bitcoin isn't issued or controlled by any central government, meaning it isn't subject to the policies that affect traditional money. The price of Bitcoin is determined by various factors such as its supply, market demand, availability, competition from other cryptocurrencies, and investor sentiment. It's important to note that Bitcoin supply is limited. The mining process for Bitcoin will continue until 2140, and after that, no new coins will be produced. At this point, a fixed number of only 21 million coins will exist. What determines Bitcoin's price? Bitcoin operates differently from regular currencies because it is not regulated by any central bank or government. This means that the factors that usually influence the value of a currency, such as monetary policies, inflation rates, and economic growth measurements, don't impact Bitcoin in the same way. Bitcoin acts as more of a commodity being used to store value, so the following factors influence its price: the supply of Bitcoin and the market's demand for it, the cost of producing a Bitcoin through the mining process, the number of competing cryptocurrencies, regulations governing its sale and use, media and news, effects of supply on Bitcoin's price. The supply of an asset can significantly impact its price, and Bitcoin is no exception. The scarcer an asset, the higher its price tends to be, while more readily available assets typically have lower prices. Bitcoin's supply is quite unique, with only 21 million ever to be produced, with less and less being created each year. The protocol controlling Bitcoin only allows for new coins to be created at a controlled rate, which gradually slows down over time. As a result, the future supply of Bitcoin is decreasing, which in turn creates a higher demand. Imagine if the supply of steel were to be reduced every 4 years until none remained, and the public was made aware of this fact. In that scenario, the price of steel would skyrocket due to its scarcity, just as we've seen with Bitcoin. Bitcoin's price and demand. Bitcoin's price is driven by a complex set of factors, including demand and supply dynamics, media coverage, and even illicit activities. Investors have been drawn to Bitcoin due to its potential as a store of value and a hedge against inflation. Countries with troubled currencies and economies have also turned to Bitcoin as a way to preserve their wealth. However, despite these factors, the price of Bitcoin remains highly volatile, experiencing periods of boom and bust. For example, after reaching record highs in 2017 of almost $20,000, the price of Bitcoin plunged to just above $3,000 in late 2018 and remained low for a prolonged period before surging again in 2021. The latest cycle showed a new record high in 2021 of over $64,000, only to fall again to below $17,000 in late 2022. Production costs and Bitcoin price. The cost of producing Bitcoin is a critical factor in determining its value, just like with other commodities. Studies show that Bitcoin's price in crypto markets is closely related to its marginal production cost. This cost is a combination of direct fixed expenses for infrastructure and electricity required to mine the cryptocurrency and an indirect cost related to the algorithm's difficulty level. Bitcoin mining involves a network of miners competing to solve an encrypted puzzle, and the first miner to solve it receives a reward of newly minted Bitcoins and any transaction fees collected since the last block was found. This competition, combined with the need for sophisticated equipment and high electricity consumption, drives up the production costs of Bitcoin. Thus, it's no surprise that production costs are a significant factor influencing Bitcoin's price fluctuations in the market. Furthermore, the difficulty level of Bitcoin's algorithm can also impact the production rate, which, in turn, can affect the overall supply and price of the cryptocurrency. The electricity consumption required for the Bitcoin mining network is so high that it's estimated to surpass that of some small countries. How competition affects Bitcoin's price. Although Bitcoin remains the most popular cryptocurrency, it now has numerous competitors vying for investor attention. Bitcoin's dominance in the cryptocurrency market has decreased significantly over the years. In 2017, Bitcoin controlled over 80% of the market capitalization in the cryptocurrency markets. However, by 2022, this share had declined to less than 50%. This decline in Bitcoin's dominance is mainly due to the emergence of alternative coins, which have become more well-known and widely used. Ethereum, for example, has emerged as a strong rival to Bitcoin, particularly in the decentralized finance sector. Investors have recognized Ethereum's potential to revolutionize modern financial infrastructure and have invested in its cryptocurrency, Ether. Ethereum currently accounts for approximately 20% of the total market capitalization in cryptocurrency markets. Numerous other cryptocurrencies have gained significant popularity and market share in recent years, including Tether, BNB, USD Coin, and Solana, which have diverted some investment away from Bitcoin. However, this increased competition has also helped draw attention to the broader cryptocurrency ecosystem, leading to greater demand and awareness of cryptocurrencies. As the most well-known cryptocurrency, Bitcoin has benefited from this attention and maintained its high price point. In fact, Bitcoin's position as a leading player in the market has even helped to attract investors to the cryptocurrency space overall. Regulations and Bitcoin's price. Bitcoin was born out of the ashes of a global financial crisis, fueled by a lack of regulations and oversight in the derivatives market. As a result, Bitcoin's reputation as a decentralized and borderless currency has only grown stronger. While this lack of regulation grants Bitcoin more flexibility and freedom, it also leaves it vulnerable to potential government crackdowns. Additionally, investors play a crucial role in the fluctuation of Bitcoin prices. When they get swept up in the hype, the demand for Bitcoin can exceed its actual worth, causing prices to skyrocket. Conversely, when investors panic and sell off their holdings, Bitcoin's value can drop precipitously. Despite these challenges, Bitcoin remains one of the most exciting and unpredictable assets in the financial world. The future impact of potential regulation on Bitcoin's price remains uncertain. In the United States, rulings from the Securities and Exchange Commission have been known to affect Bitcoin's value. For example, in 2021, Bitcoin's price rose to $64,000 following the approval of the ProShares Bitcoin Strategy ETF (BITO) by the SEC. However, a year later, the price had dropped to well below $20,000. China's decision to ban Bitcoin trading and transactions in 2021 caused disruptions in the cryptocurrency supply and demand. Mining operations in China were forced to relocate to more crypto-friendly countries. This news alone resulted in a $10,000 drop in Bitcoin's price. However, the price quickly rebounded and exceeded previous levels as operations resumed. Bitcoin's price in the media. The world of cryptocurrency is highly susceptible to media and news coverage, which can greatly impact the price of Bitcoin. The media has the power to inform and educate the masses on the latest developments in the cryptocurrency world, for the better or for worse. Positive news such as increased adoption, acceptance, and institutional investment can create a bullish trend driving Bitcoin's price upwards. Conversely, negative news such as regulatory crackdowns, security breaches, or market volatility can cause a bearish trend, leading to a significant drop in prices. In addition to the media, investors themselves play a crucial role in shaping the cryptocurrency landscape. Their perception and outlook on the market can greatly influence the demand and supply of Bitcoin, ultimately affecting its price. With so many factors at play, the cryptocurrency market remains highly volatile, and investors should be prepared for very significant short-term price fluctuations. Are Bitcoins a good investment? Bitcoin's short history as an investment asset has been characterized by extreme volatility, making it a risky investment for some. Therefore, it is advisable to consult with a financial and investment professional before making any decisions about investing in Bitcoin, as they can provide you with personalized advice based on your individual circumstances. Where are Bitcoin's legal tender? While Bitcoin is acknowledged as a currency in numerous countries, it is only considered legal tender in a few of them. There are some countries such as China, Algeria, Bangladesh, Egypt, Iraq, Morocco, Nepal, Qatar, and Tunisia that have imposed outright bans on the use of Bitcoin. Is it worth buying $100 of Bitcoin? Investing in Bitcoin is a thrilling yet unpredictable journey, with its price constantly fluctuating. Today's $100 investment may be worth more or less in the next hour or even the next day. However, the thrill of the investment comes with great caution, and it's crucial to seek professional advice before committing your money to Bitcoin. Never invest in such volatile assets with money that you cannot afford to lose. When considering an investment in Bitcoin, there are many factors that must be considered, from supply and demand to regulatory developments and media coverage. It's clear that Bitcoin's price is incredibly volatile and subject to change at any moment. So before you commit to the investment in Bitcoin, make sure to speak with a finance and investment professional to determine if it's the right move for you. If you want more information on cryptocurrency, check out our other videos on the screen. Thank you for watching.